Hey folks, Dan Frio here, the Mortgage Update. Today is May 14th, 2020. So what happened today in the market? Well, we love it. I'm back to this old format. So it's just easier for everybody to kind of figure out. So I figured I'd make it as simple as I can. So here's what we got. We got today is the mortgage-backed securities are up 13. What's that mean? Rates got a little bit better today. Well, it should mean that they got a little bit better today. A lot of banks that we follow, we dropped our rates about 0.1. No big major change. A lot of lenders that we tracked had no adjustments. So just take that for what it's worth. But you see the trends here. I want to get to those. And sorry, I got it on another screen that I follow. So here's what we like. Why do we watch the mortgage-backed securities market? I'm going to recap it again for those new to the channel. This is the instrument or the investment or the tool that creates mortgage rates. It's a bond. So basically what we do is, in its simplest forms, we close your loan, we package it up with $1 billion worth of other loans, we sell it out as an investment out in Wall Street as a bond, which that bond is called a mortgage-backed security right there. And the yield on that is tied to all this together. So this bond is, in essence, what creates mortgage rates. That's in its easiest forms. So take it for what it's worth. So we love when the prices go up, because the higher we pay for the bond price, that bond, the lower the yield, meaning the lower the rate of return, meaning the lower your mortgage rate. So that's why we love when this number goes up. So we just follow this number. What's the things that will affect this number? There's a lot of things. Inflation, employment, unemployment, the gross domestic product, what else is in there? The case freight index. There's a whole slew of things that are involved in this, and we're in the process of creating a blog and a part of our website right now to tie all this together. So what we want to do is, the channel is basically to educate you. And so when you go to want to buy a home or refinance your home, you're educated. So now we can show you why, a lot of people use us in the mortgage process, because I want you to be aware of what's going on. So our goal here is to educate you, the consumer out there, when you're looking to buy or refinance a home. It's the biggest investment you're probably ever going to make in your life. Thus, it's the biggest debt you're ever going to have in your life. So let's structure it the best way we possibly can. That's the goal of this channel. So we're putting together a blog that's going to come out on a daily basis telling you what happened in certain fields, such as what happened in the stock market, because that then determines or affects what's happening in the bond market that affects mortgage rates. Okay? There's a correlation between all this. What's happening with the employment numbers or unemployment numbers, as we're talking right now, and mortgage-backed securities, thus bond rates, thus mortgage rates. We're going to show you how all this ties in together. So when I come back and say, guys, the GDP was bad today, you're going to think, oh, geez, that was good for rates, or oh boy, that was not good for rates. So you're going to tie all these things together. This might be a great channel for your kids if they're going in economics, college students. Give us some feedback. We'd love to help you guys kind of tie all this together. It's a financial tool. I'm introducing tomorrow a group of guys that we have on our team. They're called the Millennial Mortgage Guys. And our goal there is to educate the millennials in a lot of areas: student debt, rent, savings, how you can kind of work toward the American dream. It was funny because when I'm talking to them, people my age, 40s, 50s, 60s, the American dream has always been to own a home. When I talk to the millennials, I'm like, you want to accomplish the American dream. And they're like, what's that? Well, so I said, don't you ever want to move out of your mom and dad's house and have your own place? Yeah. I said, that's the American dream. As kids, our goal was to get a job, get married, and buy a home. I think the ideals are still there, but maybe just pushed off a little, into the future as people are getting, a little bit older when they get married and buy homes and thus. So let's get on to what happened in the economy or in the markets that made some effects today. So we saw the Dow Jones was up 377. Usually that's a bad sign for mortgage-backed securities. When stocks go up, usually bonds move in a bad direction. Usually they go down, pushing up yields. We didn't see that today, which was great. And all this is going to tie into what the Fed is doing. I'm going to play that in a second, or show you that in a second. The stock market's recovered tremendously in the last several weeks. It's I didn't know this till I was just reading this forecast. It's recovered 63%. That's huge, but it's also scary because nothing's really changed other than the Fed stepping in and doing a whole bunch of things, and that's I still say it's gonna bite us in the butt. Might not be 6 months, might not be a year, but it's going to bite us in the butt. Okay. Here's the big caption right through here. I hope you can read it. Hope your screen's not too small. The Fed stepped in and bought $4 billion worth of mortgage-backed securities today. What they're trying to do is they're trying to stabilize the markets, as we see right through here. As a mortgage lender, we love this stuff. We love that. We hate this. Okay? Volatility is our enemy. And when things are really, really, really volatile, we actually raise rates to cushion ourselves in case of in case of a big jump in something that we're caught off guard. So we cushion ourselves for, when things are going like this, we cushion rates to make sure we don't end up losing money by doing loans. So we like the stabilities in the market. So the Fed finally has gotten it, I think, is they're putting stability in the market. The tough thing is they're the only factor right now really doing that. Individual investors are coming in and buying, but not in the tune of what the Federal Reserve is doing. So that's concerning. The unemployment claims, 2.9 million people filed unemployment claims last week. That's scary. The silver lining in a lot of this is, I think a lot of, even my wife was, she was asked to take unemployment for a week or two, but she's remained employed, quasi-employed, and then their company got the PPP, and then they put everybody back in payroll. I think, and hopefully you out there that are watching, hopefully you're basically furloughed. So it's not complete unemployment where your business shut down and you lost your job. It's basically they're saying, you know what, collect unemployment right now because we don't have any sales, so we can't pay you. But as soon as the light switch goes back on, I just took several applications in California and Florida today, we're in quarantine, but we're opening up gradually. I think as soon as we see the light switches go back on, you're going to see a ton of people back in the workforce. Yes, the unemployment rate's going to be bad, but not to these levels of 20 to 22%. I mean, those are depression numbers, maybe worse than the depression numbers. So that's what we're seeing. So right now, while we're creating this blog, we're not really following gold and the GDP and employment numbers and all these other factors that we would normally study, so we can go out to you guys and give you an educated idea what's coming up. What's coming up for the stock market? What's coming up for the bond markets? What's going on with rates for the next week or several weeks or months to come? I don't really know, what tomorrow's truly going to bring, but I can give an educated idea on what that is, and that's what we try to do. So follow up, we're going to create that blog. Tomorrow, though, I'm going to introduce the Millennial Mortgage guys. We're going to try to educate those younger people and how to try to get that American dream, how we can maybe put your financials in place, like your student loans, consolidate those things into things, how you don't need 20% down to buy a home. You don't need 10%. You don't need 5% down to buy a home, how we can get you into a home with 3%, and maybe that 3% can be a grant. So those are some things we're going to put together with the Millennial Mortgage guys. Let's go to the mortgage news. The good news here is mortgage rates are actually a little bit lower today. As I said, we dropped about 0.1 today. If you locked in with me prior to, or you basically gave me the go ahead to say, Dan, we trust you. You do what you feel is right. That's what 90% of my clients do. They're like, you determine it for us, and I'll watch those for you. You can see right here, like we just spoke about, the unemployment rates are terrible. but you still had an increase in the stock market and you got better mortgage rates. All that is really baffling, but go with it. Don't try to overthink the economy right now. The one good thing is Fannie Mae right now is predicting the highest refinance volume in decades. Why? Well, it's what I preach every day. Don't do the forbearance. Do not do the forbearance. We had some news today. There's kind of conflicting news coming out in regards to the forbearance market. If forbearance is showing on your credit report, even though you're making your payments in time, Fannie Mae came out today and said they will not allow you to buy or refinance a home if you have a forbearance currently on your credit report. So if you have a rental property and you're looking to buy a primary home, you can't do it. If you're looking to refinance the home right now and you have a forbearance, it's showing in forbearance, even though you're making payments, Fannie Mae will not do it. Thus, meaning probably 90% of the banks in the country will not do it because we all use Fannie Mae's guidelines. So there's supposed to be there's new stimulus package coming out, and it's supposed to be signed on Friday that has pieces in there that's really going to define all of this information. But the forbearance is still a very odd animal that we're looking at right now. They're saying, they're basically saying you can do the forbearance and, throw that forbearance possibly at the end of your loan. So let's say you skip June, July, and August payments. They're going to give you multiple options. They're saying that you might be able to throw that on the back end of your mortgage. Well, the problem is if you do that, you won't be able to refinance. And the rates are the lowest they've ever really been. And I'm going to show you an example of a client I just spoke with, and I hope maybe if she's watching tonight, you can say, "Hey, Dan brought me up." But Fannie Mae. What I'm saying is, Fannie Mae is saying that we're going to see the highest refinance ratios in history. Why? Because a lot of people get it. They're saying, "Well, I can refinance, get a lower rate, skip 2 payments, and then when I start all over again, I can maybe reduce my term. I'll at least reduce my payments." And wonder if I even keep paying the same payment I'm paying now. You're going to see in a second. By doing that, all the above, you can save thousands and thousands and thousands of dollars. So that's what I'm going to go over here in 1 second. Let's check CNBC headlines. Housing Secretary protection for renters and homeowners. That bill is coming out supposed to be Friday, so we won't go through all that right now. I'll recap that tomorrow if that bill does pass. So let's go over to this, some numbers I ran for somebody today. So I want to just give you an idea how much you might be able to save if you're looking to refinance. So I spoke with a young lady today, and she owes $166,000 on her mortgage, and her rate right now is in the high 3s. We can drop that rate to 2.75. APR, I'm going to say, is 3.375 on a 30-year term. When I was explaining it to her, I'm like, I really don't want you going back to a 30-year term because she wasn't really hard pressed to save. She wants her payments to go down, but she can afford what she has. Plus, another little kicker to this is she should be able to skip 2 mortgage payments, which is helping out people today tremendously. But look at these numbers. So right now she's paying $892, and my proposed payment will be $677 for a difference of $215. So I said, you know what, keep continuing to pay the same payment you're paying now. So in essence, she would be continuing to pay the extra amount of $892 a month. So that's $250 extra a month on this payment that she would be making. Thus, when you factor all this in with the new interest rate, she continuing to pay what she's paying now, she'll pay out for her house in 20 years. She has 27 years remaining right now. Okay, so let's do the math on this. It's saying that she is going to save 27,000. There's more to this. Okay, she has 27,000 a year, 27 years remaining. This new loan is 20 years remaining. Her payment's $892 right now is what she's paying. So we're gonna pay off that loan 7 years early. 7 years at 12 payments a month is 84 payments. 84 payments of $892 is $75,000. Okay, let's recap that. Right now, she's making a $892 payment per month. Her new loan, she's going to continue to pay $892 a month. But because the rate is that much lower than she's paying now, she'll pay off her house 20 years versus her current loan, which she has a remaining term of 27 years. So when you add it all up, her savings is astronomical. So don't think of it as I'm refinancing, I'm going to get a lower payment. Oh, it's only 150 bucks. Oh, I can skip 2 months mortgage payments. Oh, that's all good, but I don't really know if I want to mess with it. Well, let's compound all this stuff. Instead of you saving $150 a month, continue to make the same payment. That's what I'm getting at. So in this case, if she continued to make the same payments, let's say you didn't do anything else, you continued to make the same payments at this lower rate, it'll save you a bundle of money. That's where I'm going to leave it. So let me get to it. I know I rambled and I apologize. My name is Dan Frio. I do the mortgage update every day. I'm rephrasing or rebranding the station or the show in my radio shows and my podcast to therateupdate.com. So you can find us on therateupdate.com. You can reach us at 844-775-LOAN. That's 844-775-LOAN. Or visit us on the web, like I said, at therateupdate.com. What I'm asking people to do is, if you're looking to buy a house right now, at least give us a shot. Send us the quotes that you're getting. In most cases, we're beating the rate, we're beating the term, or we're beating both in big ways. If you have a mortgage right now, like the young lady I just mentioned, she emailed me her mortgage statement and just asked, Dan, what would you do? And I got back with her with 2 or 3 different options. And I basically lay out your options to you and say, you know what, it's up to you. I'm not hard selling you. I'm just presenting you with all your options. If I can help you, please reach out to me. I won't put you on the spot. Basically saying, if you like this, just respond back. Give me 24 hours. Respond back. Let me know, and we'll move forward. If not, God bless you. Thanks for calling. Thanks for reaching out. If you would still leave a comment saying, Dan called me, everything worked out well, but I just didn't go with it. However you want to do it, but please try to do something to put yourself in a better financial position. So that's all I got to say for tonight. God bless. Thank you so much. Please give me a thumbs up. Don't forget to subscribe down below. Leave some comments. I reply to every comment. Give me some ideas on videos that you want me to cover. We're going to have a special for you guys tomorrow. I'm going to introduce the Millennial Mortgage guys, and we're going to go through some information for those younger viewers. So take care. Have a great night. God bless. Stay healthy. I'll see you later.